Hi, everyone. Thank you for tuning in. My name's Marie. My business, social media handles, website, and YouTube channel are Mareevuitton. In this series, I'm going to give you the short form videos of the most used how-tos in Studio Designer. These videos are the remake of last year's how-to series, but you may have noticed that Studio Designer got a bit of a facelift in 2025. That prompted me to reshoot all these videos to help the new users because the screen is going to look a bit different. Okay, the processes and teachings, my tips and tricks remain the same. But again, I just want to make sure that I reshoot them because of the way that it looks different on screen. Okay, so as always, please leave your feedback and questions in the comment section and be sure to hit the thumbs up button if you found the video useful. Subscribe to stay updated. Now let's dive in. Okay, I want to start out by saying before pulling your P&L, profit and loss, those are interchangeable words. Before pulling that up, you must make sure your balance sheet ties out. I will never look at a P&L unless I can confirm that the balance sheet ties out. Otherwise, those are made up numbers to me, okay? So that being said, assuming that this is correct, we are dealing with annual totals, okay? And when I say annual totals, by looking at this P&L, I'm saying that the total revenue, that's the amount that we took in, that we earned, okay, was just under 300,000. I like to break it out if there's multiple streams of income or multiple, classifications of revenue. I like to break out the portion of time so you can see the portion of time makes up for just over 25%. Okay, I like to put these percentages there. I like to calculate everything so I know where things are. Okay, cost of goods sold was $132,921. So it's about $133,000 that it took us to earn the 300,000, actually 197,771. Okay, that's what the cost of goods tells me about those sales. So in order to make the 197, it cost us 132. That's, about a 40% gain. Okay? So the profit after that, the gross profit is 166, just over. Okay, then we take into account overhead. Overhead is your cost to do business. It would be everything that is required to stay afloat, stay open. So that would be your rent, payroll, postage, things like that. Rent, all the things, whether you had 100 clients or one. Okay, that's what it costs to do business. So that leaves us with a net profitability of 132,000. Okay, in this case, I just went ahead and did an estimate, like a calculation, and said, okay, well, based on this, again, we don't know all the individual circumstances, but I calculated a $20,000 tax liability based on that. Okay, it's a little probably short, but that would, bring the total that we need to come up with for expenses as being 187, because we took 132, 34, and 20, and that gave us 187. Okay. Aside from this, I like to break it out by quarter. You can see here I divided the annual totals by 4 to get the totals per quarter. I just like to know this for my own sanity. And then I like to break that out even further. So I take the quarterly, divide that by 3. That gives me the monthly totals. Now, I know that this isn't exactly perfect because, that's not the way that the ebbs and flow of business goes, and that's not the way that the money trickles in or goes out. So again, this is just a rough estimate. So in order for us to break even, okay, not exactly making a profit, I'm saying to break even, we need to make $520 per day to break even, to be able to pay for the cost of goods, the overhead, and the tax liability. And again, this is assuming that you're gonna sell this high. I like to plan for this, so I like to see a steady increase over the years on an average. The majority of my clients have gone up by more than that, some even more than 100%. So that's what it is, $520 per day. Now that just is based on a 30-day being open. Not everybody is open 30 days. Not everybody is, going to make the money exactly like that. It's an average. That is our break even. Let me know if there's questions.